virus cases. And for some analysis now, David Dietze, founder, president, chief investment strategist from Point View Wealth Management. He's speaking to us from Summit, New Jersey. David, there's a lot of focus on, the fast tracking of treatment as well as vaccines for COVID-19. But at the back of all that is also very real concerns about safety. Even if we do get this vaccine by the end of the year, how much would that do to normalizing U.S. GDP?
So that is the big question, of course. The good news is there's about 200 entities worldwide that are working on vaccines. There's no question about it. When a vaccine is developed, how many people will respond positively to it? What are the side effects? Will there be any resistance from people using it? But with 200 different types of vaccines that are on track here, we feel eventually by the end of the year, we should have something that's proven efficacious, and by next year, it should be widely distributed. One thing that we're watching for here in the States is on October 24th, the FDA, in charge of approving drugs, is due to have a special meeting. And we wouldn't be surprised if they named not just one, but several drugs as declared proven vaccines. This would be very timely, of course, with the elections coming up in November to try and spur confidence and promote the economy just in time for the big presidential election.
If we do see that vaccine much touted, are you expecting a closing of the gap between tech and the rest of the market in the U.S.?
Everyone is trying to figure out at what point will the baton be passed from technology to the rest of the market, which has lagged dramatically. Certainly, I think it's two things. One, and they are related. One would be potentially a vaccine that people deemed as efficacious. Why? Because that would give people confidence that the recovery trade, travel and leisure, restaurants, transportation would all start to get new traction, and people wouldn't have to be hiding into those secular tech growers, which people are using so much of, because when they're staying at home, people will be more likely to get out. The other thing, of course, is to look at interest rates. Certainly, if interest rates start to bump up, very highly valued tech stocks whose earnings are out 10 to 20 years would be slightly less attractive as discount rates go up and people are looking for more cash flow right away and therefore looking for more dividend-paying stocks. Of course, if the vaccine was there, that would prompt more economic activity, could give rise to inflation, which could spur interest rates and could increase the demand for money to borrow and so forth, again, to increase interest rates and may cause the Fed to pull back a little bit. So those two things may cause the baton to pass from tech to the other areas of the market.
Yeah, and I suppose we'll get further details and clues from the Fed later in the week. But already last week, based on the FOMC minutes, there seems to be a bit less of an expectation that we're going to get yield curve control anytime soon. What's your outlook for the bond markets?
Yeah, so the Federal Reserve, people were very disappointed with those minutes. Of course, they were written in July and only revealed to us just last week. The way I read that is they were trying to spur Congress to do their part by passing another stimulus bill. If the Fed had painted too rosy a picture or said we can do it all or we will do it all, that might have provided further roadblocks for Congress to pass another stimulus bill, which I think the Federal Reserve feels is the additional help that's needed because, of course, with lower interest rates, it certainly helps the biggest players in the economy, but may not trickle down to Main Street. And Congress, by passing a stimulus bill, is well positioned to help that area. So that's the way I read that. There's no sense in my mind that the Fed is other than completely all in to keep interest rates down and ultimately to do whatever it takes that they can do to propel this economy upwards, at least until this vaccine is discovered.
All right, David, a lot of chess pieces moving on the board. What's your advice for investors?
Well, job one is to stay diversified. Continue to hold on to your fixed income. It's yielding very little, but of course, if vaccines are delayed, if there is a very vicious outbreak of COVID, markets could sink, you're going to want to have some safety net in your portfolio. And then among stocks, there's really two types. One is the safety trade, the stay-at-home trade. That would be your cleaning agents like Clorox, your food delivery at home like Domino's Pizza, and of course, those types of technology that we're using more of because we're staying at home. An example of that would be Netflix. But I still think that since we think that ultimately the vaccine will come, and because prices are so beaten down on the so-called recovery trade, that you want to have one foot in the camps of the travel and leisure stocks, the gaming stocks, even a company like Boeing, which we do own, which ultimately is responsible for making half the world's airlines. We think those down about 2/3, even if they take 5 years to recover, that's a very good return on your money. And there's no scientists that are saying we're going to have to wait 5 years to be healthier in this situation.
David, thanks for setting us up for the trading week. David Dietze, founder, president, and chief investment strategist at Point View Wealth Management.